Advanced Micro Devices, or AMD, which is one of the two main computer processor companies in the entire world. Dr. Lisa Su has led this wonderful company ever since 2014, and during her reign as the CEO of AMD, the company is actually 75x'd in value. So if you had invested $10,000 when she became the CEO of AMD, and you managed to hold that position up until November 2021, that investment would have been worth up to $750,000 US. Following that insane upward trajectory, the company is now down about 40% in the last couple of months, and that might just be an opportunity. Today we gather together to talk about just that. Welcome to another installment of Analyzing Your Stock Picks, the series where I analyze your stock picks. Thanks for the recommendation, TBWCH. You are an absolute legend and I appreciate your continued support. Now let's get into the value proposition that I see at AMD's current valuation. You see, AMD is a pretty well-known company, so I don't think I can add a lot of value to your investment lives by going through their business. If I am wrong and you do want me to do a company overview of AMD, please do let me know. But in this video, I'll add value to your investment journey by focusing on the valuation, which is arguably the most important thing about value investing, the price you pay for a company. So currently for AMD, that's about $100 per share, and with their most recent financial results, where AMD managed to do $2.71 in earnings per share, $15.01 in revenue per share, and $2.63 in free cash flow per share. And at $100, we can see that we're paying these amounts for the company. And well, historically speaking, paying about 37 times earnings isn't the best move that you can pull. You see, at the current price and the current profitability ratio of AMD, it would take you about 37 years to get as much profits from your investment as your initial investment. As a reference, that results in about a 2.7% return at the current profitability per year. So obviously the return from their current profitability isn't that great. So if you want to get a market beating return from AMD, say for example 15%, you will need AMD to grow substantially. You see, assuming a 15% discount rate, which is the number that will give you that market beating return we're looking for, well then at the current share price of around $100, then these growth projections are baked right into the share price. If you believe AMD will grow their profitability, or basically earnings per share in this case, at around 23% for the following 5 years and 17% for the 5 years following those, well then AMD makes quite a bit of sense at the current share price. It could give you about a 4x return in the following 10 years, which is really solid. However, with these quite bullish growth rates, you're still getting no margin of safety. No margin of safety at all. So at the current share price of around $100, if you do want a margin of safety on your investment, you will need to be even more bullish on AMD's future profitability. Basically, what I want to show you guys is that at the current share price of around $100, you are still betting on AMD growing their profitability in excess of 20% for a long while still. This growth certainly is possible, but it is something to be aware of. And like we've stated, at these growth rates and at the current share price, you are getting no margin of safety. Meaning, say you made a mistake in your projections, well then you effed up. There is no margin of safety that will save you there. If we compare that to, for example, Regeneron, where at the current share price with quite reasonable growth rates, I can still get a 50% margin of safety on my investment. So with this one, I can most likely be way off on all of these projections and still most likely make a profit. With AMD at the current share price and these projections, I do not have that luxury. So that is the current market valuation of AMD. But what if you are even more bullish on AMD? How does the valuation look then? A bullish projection. This was to be expected, but to get to that magic 50% margin of safety at the current share price of around $100, you need to be super bullish on AMD. Basically, you need the company to grow their EPS or earnings per share at 31% for the next 5 years, and then to continue that mind-boggling growth at about 26% for the next 5 years after those. And then with a pretty high future P ratio of 25 and that 15% discount rate, which will ensure your market beating return, only then do you get a 50% margin of safety at the current share price. As a reference, people, AMD's 2021 EPS is only 27% higher than their EPS during 2020. So you actually want AMD to accelerate their growth from here on out. For AMD to make sense, including such a large margin of safety, you will need them to become a $1 trillion company by the end of this decade. Otherwise, you ain't getting a 15% return per year, and you sure as hell ain't getting that 50% margin of safety. All that is to say, I think these bullish projections are out there, far out there. And I believe if we look back in 10 years, they aren't likely to be a fact. I do not think AMD offers a great value proposition at the current share price. Before making this video and before doing these projections, I actually believed I loved AMD, even at the current valuation. Don't get me wrong, I do not have any positions in AMD, but I was pretty optimistic. And that is the reason why we do these projections. To learn what price we're paying for the company, to learn how frothy the current valuations are, and of course to get a feel for what we should be paying instead. So right now, I'll give you guys the valuation where I would personally consider buying AMD. My buy targets. For this projection, I am using a 20% growth rate in EPS for the next 5 years and a 15% growth rate after that. These numbers certainly are still steep, but they should be achievable. I am still using the same future P ratio of 25 as all these other projections, since this number is quite easily attainable, especially if we're in a bull market for a tech company with reasonably high profit margins. These growth rates and a future P ratio and my 15% discount rate puts AMD at an intrinsic value today of around $80 US, which is below the current share price. So actually, I'm arguing that at the current share price, AMD is still overvalued for me, even after the most recent price decline. I think AMD is a reasonable buy around the $50 mark, since I do want a margin of safety. I am fine with giving up a bit on this margin of safety. I am fine with using a 35% margin of safety, which is the one I am using here. Keep in mind though, even this low price of around $50 per share isn't attractive enough for me to start a large position in AMD. $50 is the mark where I'm okay with building up a small position in the company. Let's call this number my nibble price. If the share price goes below, I'm okay with building up a tiny position over time. If the share price remains above $50, AMD just doesn't make sense for me. And I believe that is the main gist behind the value I see at AMD. I do believe AMD is an amazing company, which I certainly wouldn't mind owning, just not at the current valuation. Again, my personal nibble range starts around the $50 mark, but I still wouldn't build up any significant position at AMD above $40 per share. However, I'm just a guy with some cool lamps in the background and some acceptable video editing skills. If you believe my valuation is off entirely, please do start a conversation down below in the comment section. I believe we can all learn from opposing views. And with that said, thank you so much for watching. Peace.